Hey there, this is Michael with Buffalo Finances, and I have a question I'm just going to make a video on here. What do you need for taxes when you have property that you've inherited and you've sold that property? There's three main things that you need. I'll list them off and then I'll explain them. First, you need something that says what the value of the property was at the time that it became yours or became the estate's. Two, you need any expenses related to repairs or renovations that occurred to make the property more valuable during the time of ownership. And third, you need the settlement statement that shows how much the property was sold for. Those are the three things you need. Now let's talk about what happens with taxes. Let's say somebody passed away last year and in and the property that they owned, they bought it for, let's say, $200,000. When they passed away, it's worth $500,000. Okay, so a $300,000 gain. All of that gets totally ignored by the IRS. The $500,000, the $500,000 that it's valued at, that is the new cost basis for that property. And that passes to the new owner, which could be the estate, a trust, individual. That basis is really hard to prove because there's no transaction, there's no money that changes hands. The best thing is probably real estate tax records, or if you get a real estate agent to appraise it, that's the best thing. However, it's very difficult if you don't get those things. So we like to just go by the tax records, what the assessment is at the time. That's the hardest number. Now, then let's say in the current year, for the last year, you've been doing renovations to it. We need to record all those expenses, keep track of them, and have a total. What are those renovations worth? So that you can get the property from where it is to where you want it to be for living in, or whether you're going to sell it, what it's good, what it needs to be for selling. Let's say that happens, and there's, $100,000 worth of repairs. So now your cost basis was 500,000. We're going to subtract 100,000 of repairs, renovations, and now it's worth $400,000. That's our new number, $400,000. Then we go fast forward and we sell it for, let's say, 550. That's how much it sells for. The the amount due on that is going to be based on that difference between that 400,000 and that 550. Okay, so it's $150,000 gain on this property. That's how we'll do the math. And that last piece for documentation is going to be how much it sold for. That's a settlement statement. So maybe it's 550 is how much you sold it for, and you probably have closing costs. We're going to subtract from that. All right, that's my quick tip about what we need to gather for taxes related to property that's passed from a loved one. All right, thanks very much. Have a great day, and God bless.